As you can imagine, there's quite a significant impact to all businesses as a result of COVID. You've got production disruption, sales reductions, and all these things can have various flow-on impacts. It can affect your liquidity, it can affect a business's working capital, and all these factors could then impact on covenants if your clients have covenants. And the other area that would also impact on covenants is if your clients have decided to take up lease accounting this year, that's going to affect the balance sheet with additional liabilities and additional assets being recognized. So if any of you do have clients that do have borrowings, you really want to get them pre-June 30 to be having a look and seeing if their ratios are going to be impacted. Because if there is a breach of their covenants in terms of ratios, from an audit perspective, it means that when you have your financials, the borrowings that you have will all be classified as current instead of being split between current and non-current. And that could be very distorting for any end user that has to see it. So we've been telling all of our clients that see if they can amend, negotiate, or waive call rights, and you want to arrange that before year end. Other areas that they can consider are deferred payments, supplier financing. One thing to be mindful of is when you have a disruption to business, certain industries, for example, in particular construction industries, they would capitalize the borrowing costs relating to obtaining finance. If that construction is paused for any given period, the period that the construction is paused for, you can't actually capitalize those borrowing costs. So it's unlikely to be a large amount, but it's just something to be mindful of, especially for those clients that are in industries where you might have production that's seized and they have loans taken out against that production. The other thing to also be aware of is financial guarantees. So if the business is liable for payments arising from financial guarantees, you actually have a contingent liability. And if you're preparing general purpose financials, you're required to disclose that information. So it's just something as an FYI to be mindful of. Okay, some additional impact. To assist businesses for their financial reporting obligations, ASIC has been somewhat generous. They will consider if businesses are having difficulties, they can waive outstanding fees, including industry funding levies. So have a look on the ASIC website. It provides specific guidance around what criteria needs to be met in order to get those fees waived. The other thing that is potentially quite beneficial for a lot of companies is where they report to ASIC, they've been given a 1-month extension for having audited financials lodged. So at the moment, it would be, I imagine for most of your clients, because you probably don't have listed clients, it will be 31 October. So you've got an extension to 30th November. Note that it only applies for this year though. So the other thing that is an impact from COVID are AGMs. So for clients that have a 31 December or a 31 March year end, ASIC has taken the position that they're not going to have any action taken where there's non-compliance around holding a virtual AGM or deferring your AGM. They've also given a 2-month extension to 31st July for 31 December year ends. Have a look on the ASIC website as they will release further information around 30 June year ends when you get to that. Some things to consider when you're holding a hybrid or a virtual AGM. Have a look at what your constitution requirements are. You may actually want to speak to your clients and just be proactive and say, what are you doing about your AGMs? Are you taking it online? If so, make sure they've got a quorum and they can consider proxy as well. Have the ability for members to participate and vote being taken into consideration in how the AGM is held. Is there adequate access to technology and security around the AGMs? It's important to consult with your key stakeholders as well, because it's quite a significant difference to how things are done. The other thing you also want to consider is that if you're making decisions that are different to what is normally done during an AGM, you really need to document what's being done